quick update on the Nasdaq 100 heading into the weekend. Price has been flirting with the 200-day simple moving average this week, which currently sits around 13,478. The Nasdaq 100 at the moment remains below the 200-day, but we'll have to see how we close into the weekend, especially with a $2 trillion worth of options expiring today, so more volatility to come. To recap, price initially gapped down overnight on Sunday to start the week lower, which was driven by disappointing economic data out of China, with the country's central bank cutting rates unexpectedly, spooking markets somewhat. However, indices recovered by the close, which saw price hit our 13,720 resistance level the following day. Since then, price has been trading level to level, with first 13,720 tagged as a resistance before our 13,400 support level was hit after Fed minutes were released on Wednesday, showing that the central bank would continue its aggressive hiking campaign until it can tame inflation. Inflation does remain a problem, with the latest numbers out of the UK showing inflation hitting a 40-year high. In terms of sentiment, the fund manager survey was released this week, with this headline suggesting investors were not as bearish as last month, and that can be seen in this chart, which shows pessimism is easing slightly. You can see the chart highlighting the same thing in October 2008, but I go back to what I said in a previous video and bring this chart back up again. Making comparisons to 2008 bottoms and sentiment indicators like this one in order to forecast turning points, you can see here the Nasdaq 100 went on to make a new low before bottoming in March 2009, suggesting that this chart is a good medium to long-term contrarian indicator and not an immediate one. There have also been charts on price action of how closely aligned the most recent rally is with 2008. And whilst it may be the case that price continues to follow the ghost of 2008, the focus for traders should be on where price is currently trading. And that is currently below 13,400 support level, with options expiry the driving factor. Price action this week has centered around the 200-day moving average. I mentioned in the last video we're at a key turning point, with the 200-day moving average in focus, and I'll explain why. Here is a chart of the number of stocks in the Nasdaq 100 above their 200-day moving average. If you see the low points, December 2018, March 2020, and June this year, all cyclical low points on this chart led to rallies in the major indices. We're experiencing that at the moment, and the number of stocks above their 200-day moving average is rising. However, we had something similar in March this year before it fell. Look at what happened to the Nasdaq 100 in comparison. The index fell as breadth fell, with the number of stocks above their 200-day moving averages falling. If we join the highs from March, we can see prices at the trend line, suggesting more stocks need to push above their 200-day in order for the Nasdaq 100 to really break out. In terms of levels to watch into the weekend and next week, the 200-day simple moving average sitting at 13,477 continues to be the key. Resistance levels from where we're trading at right now are 13,270, 13,400, and 13,610. On the downside, support levels are 13,189 and 13,050 to 70. We're likely to bounce around the 200-day and key support and resistance levels around it until the market breaks one way or another. With that said, thank you for watching, and do hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.